Hello, everybody, and welcome to the Speaking of Insurance podcast. My name is Aaron Bollinger.
My name is Brian Bollinger.
Today, we're going to be talking about succession plans and all types of businesses and why they're important. Why are they important, Brian?
From my perspective, most business owners don't have a plan that's actionable to basically be able to hand off their business to somebody else in a timely manner, and basically that's a big problem.
So are you talking about retirement, or just every day-to-day things that happen, like if somebody becomes sick or something like that, like when they have to, pass the torch for a day?
Exactly. All the above. I mean, redundancy in business is a huge thing. A lot of business owners, we work like crazy. We love our clients. We love our jobs. We love our businesses. We love our products. And we work really hard, right, to be as successful as we are. The challenge is we typically don't have a lot of space in our schedules for vacations. And part of the reason for that is because we don't have any redundancy in staff or in processes. And that could even delay retirement.
I know obviously you as a business owner, you put a lot of pressure on yourself, and so to run the majority of things in the business and to, be the indispensable line, which is a story that you told me about. And obviously the long-term goal of a business owner should be to not be indispensable to the business, right? To have people who can pick up the slack when you're slacking or when something happens in your life, and to eventually, again, pass it off in terms of retirement and have the business still be able to be functional. So like you, what are some things that you've done, some actionable steps that you've been able to implement in your business that make sure that you aren't indispensable to it?
Well, I think that's the challenge, right? I mean, most business owners, they do consider themselves indispensable. They believe that to be the case. The problem is, if and when something happens to you, there may be no redundancy there. There's nobody else to pick up the reins and run with run the business. So one of the things that we've been doing, right, is getting you to the point where you were licensed, you've been transacting insurance, you've been, finishing up your UCLA business degree. These are things we're doing to try to prepare for, say, a 5 to 10 year plan to basically be able to reduce my involvement in the business and help scale it. Also, hiring people is another, aspect that we've been working on to try to increase the amount of resources we have so that we, essentially I can take a vacation for a week or two and not be answering a call while on the beach in Hawaii, stressed out about something, which is typically what happens.
Yeah, obviously, I mean, we don't get a lot of time to get off, but the time that we do get off is good. And so I know that your experience is unique. Obviously, having a child in the business, not a lot of people do have that. But for those who do, those who are fortunate enough, obviously getting that kid to the level that they're actually able to, again, in my industry, transact insurance, right, help people, service clients. In other industries, pick up the day-to-day things of the job that would be required of a boss or an employee or both, right? So creating those structural skills, those foundational skills, and also the more important ones of being like a manager or being a boss as well. And I think that you've done a really good job of putting me there. But for those who don't have a child that's going to be into the business, right, how do they talk to their employees and create that relationship with them where they're able to also not have to worry as much in terms of going on that vacation to Hawaii that we all want?
Yeah, and that's the challenge, right? I mean, one of the benefits of being an employee is typically when you leave, you go on vacation, the work stops for you, right? Somebody else on the team picks it up. A lot of times it's the owner or manager or supervisor, or things get delayed, and that's just a reality. But when the owner takes a trip or a vacation, always the concern is that things slack off, something breaks, you might lose a big deal or lose a client. There's always these fears that go on. So one of the things is creating a system and a process so that, when you're not there, there are people empowered to make decisions and keep things running. I have had examples of some of my colleagues in the business. They unfortunately passed away prematurely, and, their key employees were the ones that kind of pick up the reins. But, prior to that happening to them, when I talk to them, they're like, yeah, I don't think that person's going to be the best fit long-term for my business and my clients. So one of the challenges is identifying resources in your network of people that might be able to help you either on a short-term transition plan, temporary basis, or for a long-term basis, partnering with people that can help perpetuate your business and help you be able to get that freedom.
Yeah, so you made up a great point when it came to, having expectations for when you're out of the office for who's doing what, right? Like actual outlineable things. Like if Brian would have dealt with, for example, like this group health renewal or this group health, shopping and quoting, then, ordinarily you'd have somebody who would do that when you're out of the office, somebody who you had trained beforehand, given the expectations of what they were to be doing. So then when you're out of the office, you don't have to do that all of the time. Again, you still definitely will work even when you're on vacation, right? There's no such thing as a vacation for a boss. I think that that you've shown me that at least. And so, but again, it is important to have those things where, not all the pressure is on you, right? I mean, all the time it's unsustainable, I would say.
Well, that's the challenge, right? If you want to scale a business, one of the first things you have to do is start to create the processes, procedures, and people in place to basically allow you to be less, in the day-to-day operations and more at the managerial level, and start to scale the business. And I think that's kind of about where we are at this point, right? I mean, we're trying to, bring on new people, bring on new resources, while still keeping the quality service up, and allowing, me to have more time, for example, to do the quality things that need to be done, but also make sure that we empower staff to basically grow and achieve their own level of independence and autonomy so that they can take the reins and they can take the lead on initiatives on an as needed basis, with the goal long term for them to be able to advance in the career, make more money, and have more job satisfaction.
Yeah, that's a great way to of course, keep satisfaction is by giving them a long-term gain as well, right? Like giving them some skin in the game, as you would call it, in terms of, if you're doing a really good job and it goes over years and years and years and years, and you're really consistent and a great employee, then you build that trust with them, that rapport with them, and you obviously, as a boss, you do reward that and people like that. And the goal through this podcast, I think, is to help people, not only in succession plans through this podcast, but I mean, we also try and help people in succession plans in real life, right? So like the insurance game, right? I mean, there are some people who we work with who wouldn't ordinarily, like without us, have a succession plan, right? And so we try and help people structure that and make sure that they're, not only getting the best bang for their buck, but like they understand the ramifications of handing off their business and who they're handing off their business to.
Yeah, it's part of it, right? I mean, by having partners involved in your, business, it can help you scale. It can help you have that redundancy, and having the resources identified before you need them is key. A lot of times, a lot of businesses, I know this one I'm thinking of in particular, company was doing like $30 million a year in sales. The husband was the key guy. Like, he was making great money. The wife had great money. Everything was fine with them. He died unexpectedly. And at that point in time, all of the deals that he was involved in, all the structures, he was the essential lion. And once he passed away, there was nobody else to take the reins, and the entire business, it went to zero. I mean, and a while later, a couple of years later, she was talking to me and she's like, "Do you know anybody that might want to buy this business?" And I was like, "Well, maybe, but what kind of revenue do you have?" And it was zero, and it had been zero for years. Now, there was some intellectual property there and some things that might have been able to be, salvageable. But again, you lose that momentum in business. It's hard to kind of reprime the pump. So one of the things to keep in mind from my perspective is making sure you have a team, not just you being the essential lion, but bringing in resources, having people around you that if you did need support, even on a temporary basis, that they could step up and help you. I mean, I saw it with my own father, right? I mean, when he had cancer for the third or fourth time, I had enough resource in the business, and we had enough resource in the business, that we were able to help the clients almost seamlessly. And, not many people have that ability. And I think that's a crucial thing to make sure that you have a plan for.
Yeah, to prevent things like the example that you had given from happening. I mean, it's really important to not only have ideas for what employees could do in terms of when something catastrophic like that, or even when a week off happens, right? So how are you able to properly select the person, just in general, who will be taking over not only your business, but like your work that you do, that you might be considered indispensable without that work being done?
Well, I think you have to have partners somewhere in your business. You have people that are at the same level you are as a business owner. Sometimes the employees, don't have the full skill set to take on the full responsibility of running the P&L and L and making sure the business is operating effectively, taking care of the client, demands, complaints, those kinds of things. These are unique skill sets that not everybody has. So again, my perspective is you need to have a plan in place before you need it. And I think most business owners don't. And especially small to medium-sized businesses, a lot of them, are, I don't want to say paycheck to paycheck, but certainly quarter to quarter in terms of their revenue models, sales models, and these things. And I think that if they were to lose a quarter or two because of, say, a health issue or something like that, for a lot of these businesses, that's enough to put them, out of business. So when we have, we talk about, somebody dying, I mean, that's very straightforward. Having a life insurance policy for a key man insurance or key person insurance, certainly something that might be good for the business to have. But again, using that $20 million to $30 million a year sales example, once that person succumbed and was gone, nobody was there to manage the relationships with companies like QVC, and nobody's there to manage the supplier relations or come up with new products or new product marketing plans. There were a number of skill sets that that person had that he didn't identify other resources for, and when the family had to step in to take it over, none of the family had any time or interest in doing it. So essentially it died on the vine, it withered away, all the value basically expired. If they would have had some identified possible partners earlier, even if it wasn't, say top dollar, it would have been something. And it could have been quite substantial for the family.
It would have been a lot better if they did have that life insurance policy that you talked about, right? Somebody
They did a couple $1 million, and so I'm not saying, and these people were pretty high end lifestyle, right? So a couple $1 million to some people sounds like a fortune. But again, if you're used to making $3 million a year and you've got a $5 million a year life insurance policy, that's not the same thing. It's within a decade, there were substantial changes in lifestyle that had to happen. And that's about the time that person was starting to realize that the walls were kind of closing in financially on her. And that's when she reached out to us. And of course, by then, there wasn't enough there to try to put something back together. A lot of the contracts had expired, the exclusive deals had expired, there hadn't been sales in years. It was really hard to get anybody to even have interest in it. Competitors had already moved in and taken the market share, so there really wasn't a whole lot of opportunity there. Again, it could have been a good turnaround story, but it's much more value in the business if it's already operating than if it's suddenly not working at all. And again, a lot of these business owners are the essential lion, and they need to think about that and really have a plan in place proactively.
Yeah, I'd say when a family's income is reliant on a business, it's very important to have some sort of succession plan or idea what would happen in the event of something even so unexpected as that, right? So to make sure the business can stay afloat and the family can stay afloat. And a part of that is insurance, but a part of that is, your responsibility in making sure that, like you had said, the essential line, like you're not somebody who, if something were to happen to you, the whole thing and all of your family's income would just basically go out the door.
And also, I talked to some, business acquisition, like PE people, private equity people, investment bankers, these kinds of things. And one of the things they look at when they're evaluating a business is, how good is the team? How robust is the business without the business leader? And that can have a huge implication in terms of what the value of the business is. So by reducing your, essentialness, if you will, you can actually maximize the value of your business substantially. In some cases, doubling or tripling the value, or in some cases, it, being this was zero and, millions of dollars. And so these are real things that people need to be aware of. Nobody wants to be forced out of their business. Everybody wants to do their own thing, be their own boss. Totally understand that. But again, it is important to have partners available to help you in the event that you need it. Again, you need to start early, identify those people, vet them properly, make sure they have the same personalities as you or the same interests as you, and then go from there and see if there is an opportunity for them to be a backup in case you need them.
Yeah, and I mean for you, it's as simple as having a kid who's been socialized and basically trained and mind brain what is it called when you oh gosh, whatever, just you've made me like insurance, Dad.
Clone you or something, right? I mean,
Yeah, yeah,
that's true, right? For us, for, say 5 to 10 years out, but God forbid it happens sooner, right?
yeah.
And we do have other partners in the business that are senior people that are able to step in and support you and help you get to that next level too. So again, it's about having redundancy, multiple ways to get to the same end result. And again, you can't just have one essential person for everything. You got to have backup.
Yeah, I would 100% agree with that. It's really important for all businesses of all sizes and industries. It's really important for that. So obviously we know your industry is the insurance industry. So how has your experience been with creating your own succession plan and how to structure it appropriately?
I can say it's a lot more work than you think it should be. I mean, it's one thing to bring in full partners and have buy-sell agreements and things like that, or first right of refusal or last right of refusal, different things like that, like last look at the deal. Certain things like that are contractually required when you have partners. And again, it's there for everybody's mutual protection. Also, some things like thinking about, tax planning. I mean, you get a big check for selling your business. You might have a big capital gains, hit that year. That's great for you. Maybe you just want to cash out and move on. However, some people might be able to extract more value if they stay on as a junior partner or a silent partner, maybe fund it and make some interest on the money that they have. Well, the business is still your business. You know what it was. You know what you had. If somebody starts running into the ground, I mean, You being there to say, hey, this isn't working, here's what you should be doing instead, that's good for you and good for the other party. Now, again, not everybody sees things eye to eye. There are private equity companies out there that do want to extract, the value of your business and possibly, not keep any of your staff and things like that. So I think it's important to partner with somebody who has a similar vision for your business that you have, and making sure that that they're able to actually deliver, on the promises they make.
Yeah, because I mean, if you build your business with a group of employees, and then obviously, if you're looking to retire or cash out, all of a sudden, if you to go to private equity and have them, basically, clean house, right? Then that's a very negative thing for those people that you built your business with, and having an idea for how that might impact them is also something that's very important.
Well, and again, some of these private equity deals, they look really good, lots of blue sky, lots of positive possible, ROI and money and things like that. But in reality, a lot of them have significant clawbacks. And you see people all the time saying they got, 30% of what they're expecting or 50% of what they're expecting. Very rarely do you hear somebody saying, I got 5 times what I thought I was going to get. Like, I just haven't heard that be the reality. And then we looked at some private equity deals that I could have gotten involved in or merged my business into. And one of the issues we had is some of them weren't even profitable operationally, which means they had really high overheads. People in the business, using first class airplane flights or private jets, things like that. World class travel for the operators of the business, the CEOs. The problem is I didn't translate back into bottom line efficiencies, and overhead was exceptionally high, definitely inflated. So again, it's important that you understand what you're getting yourself into, and not go into it thinking that they're going to do exactly what you would have done, and that the expenses would be as hopefully conservative as you had them. Because again, a lot of these deals are based on price to earnings multiples. You have to hit certain targets in terms of profitability, and so all of these things do matter. That overhead can be a significant hit or drag on the value of your business.
Yeah, I think we've touched on all of the bases here, right? I mean, we've talked about the short-term situations where, a vacation or a sudden illness makes the boss man or boss lady or boss person out for a while, and then we have the staff to pick up for it, and then we have the long-term plans with the death or something horrible like that happening, or you decide to sell, and making sure that you have that plan in place is vital to not only your business but probably your livelihood.
And getting started early, right? I think that's the biggest thing. Is most people are reactionary in life; they're not proactive. So having a proactive plan is really crucial, and making sure, again, identifying the partners you want to work with, trying to pre-establish terms that are acceptable to you or possibly even quite beneficial to you and your family, for the long term. And really being involved in that, earlier on, I think is the key. Not being an essential lion, and God forbid something bad happens to you, and there's nobody to, basically buy your business from your family. That's the worst thing in the world that I can see from my perspective.
Hopefully, we've been able to convince people to not have that be the case, and structure agreements that are favorable for not only the other party but for themselves too and their family.
Yeah. So talk to people now, talk to your network. If you think you might have an issue here, start to work on it. Don't wait till it's too late. I mean, honestly, if something like when my dad had cancer, it would have been way too late for him to pull me in, right? I was already in the business, already operating, and obviously you are too. So that's the deal.
Awesome. It's been great talking with you, Brian.
Take care and talk to you later.
Bye.